Hi there and welcome to this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances and you need to decide for yourself whether it's appropriate to you. Okay, so decent pullback on the XJO today. Probably one of the most bearish days I've seen in a few months actually here. No surprise though, guys. Look, the markets were getting a little bit overdone. You know, from our lows here, we've pushed up almost 6%. And if you go back through the past few pushes up off trend that we've seen this year, it's been around roughly 6, 7, 5% type movements is what we've been able to achieve. Okay, so you can see that through here. So it's just a matter of time before we're going to get one of these either sideways moves or a little bit of a pullback. Okay, so now really a few things just to take into consideration here. This pullback's not just pure selling, right? This is very typical to see around CBA's dividend in reporting time in August. So we saw a big move up in CBA coming into the reporting season. After the report, we've seen a bit of a pullback. CBA's fallen about 10%, but a big portion of that move today overall was the dividend. Okay, so we saw CBA go ex-div. CBA is extremely expensive. That's pulled back most of the big banks here in Australia today, except for Macquarie. So nonetheless, financials being the biggest sector of the market, a lot of financials down today. No surprise that we've seen a reasonable pullback on the XJO. This does not mean we're at the start of a change of trend. This does not mean anything has changed, guys. Okay, this means the market's gone a bit too hot. We're coming into dividend period, and typically through the dividend period, we see a little bit of a pullback to sideways in the market. So I would not be surprised to see sideways from here, to be honest, for the next maybe 3-4 weeks. Okay, my prediction here for the next 3-4 weeks would be a ranged market between the top here around 76 or 77 and around 74, 73.50. That'd be where I think we'll stick sideways for a little while here. There's a few other things going on, okay, that's triggered a bit of selling, and we're seeing a bit of negativity coming from the Asian regions. But nonetheless, not a lot has changed in the overall medium to long-term outlook here. Short term, we're looking a little bit weak, but medium to long-term things are still looking pretty damn good. So really, yeah, my prediction for the moment, and that could change in the coming weeks depending on the scenario and what plays out, but right now my prediction for this market is sideways between 73.50-ish and 77 as a bit of a sideways channel for at least 4 weeks. So if I go across to the S&P 500, they've been sideways for a fair while through here, and now they've just had that next kick up into all-time highs. I think there might be a little bit more in this, okay? Maybe. If not, I think they might even fall into a bit of a sideways phase as well. Okay, they've had a ripper of a reporting season, so I'm still fairly bullish their market overall, but we may be going to a bit of a sideways phase here. And there's a few reasons for that, and I'll go into that in just a moment. Reason number one is Delta outbreaks around the world. US are seeing their daily cases increase on average every single week. Australia, more than half of Australia is probably in lockdown right now. New South Wales, Melbourne, New South Wales, Victoria. As you're a bigger of the two states here in Australia, both in lockdown at the same time, right? That didn't happen much last year, guys. Okay, it was mainly Victoria that copped the brunt of the lockdowns last year. We're now seeing Victoria come into an extended lockdown at the same time as New South Wales is probably going to be in lockdown until Christmas, let's face it. So at some point that has to weigh on sentiment a little bit as well. In the short term, that is, guys, okay? So I think it's not as much about Australia, but it is about the world too, okay? So we're starting to see some volatility come from China, and that is off the back of obviously a lot of tensions with Taiwan and some military exercises close to Taiwan. That has people a bit uncertain. There was a port closure yesterday in China because of a Delta outbreak. So look, these are the things that are building up pressure to the downside here. As I speak, the Chinese markets are down a fair bit. So you got the Shanghai down almost 2%, and the Hang Seng's now fallen off to almost 2% as well. They were in the green in their early session today. Okay, so we keep seeing a lot of volatility out of the Asian region. Japan was down 2% yesterday. So that's all sort of really drawing us a bit lower as well. We tend to do something between what the Asian region does and what US does, right? So if the US is shooting higher and China and Japan are falling, we'll probably hang back a bit and not quite follow US up as much. If we've got the Asian region and the US region rising at the same time, we're going to go up quite a bit. So at this point in time, we're seeing the Asian region pull us down. As I speak, also the US futures are off a little bit, nowhere near as much as what's happening through China. So let's see what happens tonight, guys. But I do believe the US futures are down on COVID worries more so than anything right now. We've gotten past most of the big news in the US. Okay, now locally we've got Australian reporting kicking off in a big way. Tonight we're going to see BHP aftermarket, so we're still waiting for that report as we speak. CBA's reported on X. We've seen the banks come through, we've seen the insurance stocks come through, and that's all been fairly positive. But you've got to remember that all those areas rose quite strongly into the report. So now things are a bit overheated, and we need to see a bit of profit taking come in before we go again. And as I said before, with the Aussie reporting season, the typical seasonal pattern that happens is a rise up into reporting. July, August is fairly bullish, and then towards the end of August, things pull back. Okay, come off the heat a little bit, go sideways through into September as you've got a bunch of dividends, and then you can start kicking up again at some point in October, late September. Okay, something like that. Alright, so that's what we believe is going to happen next, given the current technicals, the current trends, and what we've seen as a bit of a backdrop at the moment. The big thing's still stimulus here, guys, in the long run. Okay, so we've got Biden's infrastructure stimulus being approved. That's just going to go through the last few check boxes. I think we'll hear more of that in the coming weeks and months. That lines him up to his $3.5 trillion stimulus package he wants to do overall. So there's still a lot more positive to come here, guys. We've got light at the end of the tunnel with vaccines. We've got plenty of stimulus on the table. The big question mark now is the Fed. There's still a lot of investors thinking the Fed's going to taper soon, but the Fed doesn't announce again. They've got their minutes tonight from the last meeting, but they don't announce again until the end of September. So this is where there's no really big news to come from the US. We know the Biden stimulus is there. There's nothing massive that we know of. There could be something left field. There always could be something left field. There's nothing that we know of that's really going to derail markets or shoot them too much higher, I don't believe, in the very short term. Okay, I still believe we're going to see more record highs this year. I think, though, we're at the top of the current move. We deserve a bit of a breather, especially in our local market here. We're going to see a little bit of a breather soon. Okay, pull back to the trend, and then we go again. All right, that's kind of the feel right now. So the long-term backdrop for me hasn't changed despite this current outbreak around the world of COVID Delta strand. The vaccines are likely to battle that. I think regardless of what the vaccines do, the market believes that's going to happen right now, and that's all that really matters. Okay, so really what we're coming back to as just something to keep in mind, especially for our local market here, is China, right? A lot of it is China. China has put caps on steel, which is affecting the iron ore price. It's affecting the miners at the moment, so we're seeing big pullbacks in Fortescue and Rio and the like. Iron ore itself came off from 220 back down to about 160 US a ton. So that's the space to watch, guys, okay, of what's going to happen next. If things continue to get worse with China, if that nervousness continues to build, that's going to be the major way on our market right now, because it will hold those miners right back. And with the COVID outbreak at the moment, the banks will likely hold back a little bit for a month or so here until things get back under control, and therefore that's what's going to hold our market back. If we see some positivity come through, guys, which could have come tomorrow, could come next week, around China and their current outbreak, then things will probably push back up again, right? So there's a few dynamic things happening out there. Just really watch what the market's doing from a technical basis. That's the simplest way. The market pushed up. It did at 6-7%. It went into the overbought territory. Now it's starting a little bit of a sideways pullback action. Probably sideways here, like I said, for 2, 3, 4, 5 weeks, backing towards that trend. Once it hits the uptrend line again, sit and watch and be ready, okay? Ready for the next break. Alright, so look, that's about it, guys. There's not much more for me to talk about here. I'm not going to go into a lot more detail of what's happening in China. I'm just saying as a whole, it is a real way on sentiment right now. There's no one or two exact things. There's a lot of things to talk about there, and that's why I'm not going to go into too much detail, or else we'll be here for an hour. But watch out for China, watch out for the Fed. They're your two major hits of sentiment to the market right now. Alright, so thanks for listening into this video today, guys. You take care, and bye for now.